All right, let's take a look at the US futures and see how the main indices are setting themselves up. Broadly, not a huge deal of conviction, so it looks as though a lot of these markets are going to be in a holding pattern until we get some clarity from the FOMC. Remember, this is going to be an important meeting, and not only is the statement accompanied by a Janet Yellen press conference, but there will be the release of economic projections, so there is considerable scope for some market volatility, one could argue. Let's get more now with Dorland, Chairman and Chief Investment Officer at Land Foust Capital Management. Dodge, the Fed is going to find it harder to ignore that uptick in inflation. How are they going to factor it in?
I think they'll indicate tomorrow. They're going to indicate that there's a softening of the short-term growth, but as we get towards the end of this year, it's much more likely that interest rates are going to go up. I think the tapering will continue, but I do think that there will be a more hawkish stance from now on. I do think inflation is going to pull back a bit, but we're going to go through a period where the questions are going to become much more hawkish, much more offensive in terms of increasing interest rates. And I think there will be, what Yellen's going to have to do is to communicate to the world and to the U.S. consumer that everything's under control, that they expect this, and that they're going to continue the tapering as they have been, and we will consider $10 billion tomorrow will be the normal. We expect that to continue, Sri.
Dodge, if there is a hawkish tilt to this week's FOMC, how do you think the markets will take it? Will they react positively because it's a signal that growth perhaps is starting to stabilize, or will they throw their toys out of the pram because the punch bowl is being taken away?
It's a latter, Sri. I believe the market's going to pull back. They're not ready for the transition of market valuations from low interest rates to fundamental and economic valuations. This would be sooner than expected, and so therefore the fact the punch bowl is being taken away sooner, we will have a short-term pullback. I do believe it is short-term because we have a long-term and healthy growth in our economy now. The questions that are being asked of our economy are much more positive now, Sri. So we expect that any pullback will be of a short-term nature in response to what Yellen says tomorrow. So
ultimately, Dodge, is this going to help or hinder the S&P 500's attempt to take out 2,000?
Short-term, it will definitely hinder because right now the valuation of the S&P is based really on low interest rates. If those go sooner, Sri, then the market will not be ready and there will be a pullback and it'll be harder to reach that level. But longer term, as you were saying earlier, it is a healthy sign that the economy is perceived to be improving quicker than expected, and so therefore the punch bowl can be taken away without the party stopping. But it's going to take time for the transition tree. So if this happens, if the punch bowl is taken away, we do expect a pullback.
And Dodge, we were just talking earlier about the crisis in Iraq. How likely is it that either the Fed statement or Janet Yellen herself may reference the tail risks to the global economy, specifically Iraq?
Yes. There may be some comments about oil. The geopolitical risks that we're seeing and that you're talking about, Sri, are really beyond the Fed's control, and the Fed will be only reacting to what's occurring. Now, the fact that there is this geopolitical risk does put some short-term pressure on the economy, and the short-term pressure may be reason enough to continue the tapering at the levels at the rate that is proceeding now. But it will be less likely that Yellen will be able to say much about geopolitical risks. She may say something about oil and the price of oil and how that's going to affect the Fed's intentions to continue the tapering.
Dodge, very quickly, what about economic projections? Are they going to upgrade them? And if so, how sharp will any upgrade be?
Short-term, no upgrade. Longer-term, at the end of the year, we think that they will be increasing. They'll probably indicate that tapering will continue and that interest rates will be able to go up at the end of the first quarter.
Outstanding, Dodge, as always. Thank you very much indeed, sir. Dodge Dorland there, Land Foust Capital Partners.